What's up, guys? Good morning. Hope you're all having a good day here so far, but we have work to do. Let's get into it here. I'm going to be executing off of a 2-minute chart, top right, 5-minute chart is top left. We'll be using that to support our trades, but the primary time frame here today, head down, scalping, range market, 2-minute chart, top right. Now again, if we get just a beauty of a setup on the 5-minute top left, maybe we'll switch to a 5 and throw on maybe a slightly longer intraday duration trade, but probably not. We've done it in the recent past though, but we'll see. And then of course, the New York session only daily chart on the bottom of your screen. If you're not looking at this for half a second every day, what the hell are you doing? This gives us context. Right? Should we really be taking giant, massive trend breakout bets? Had you done that every day for the past 3 weeks, you'd probably have lost your retirement fund by now. So context is important, as we know around here, but let's get to work. So here again, 2-minute chart, and we will be executing off of this. We have 1:52 left on this 2-minute bar. Let's see what we get as far as a close. However, right now, we should probably draw a couple lines, huh? Just keep it as simple as humanly possible, right? Most people would probably draw that. And I would think most people would probably also draw something like that. Right, so we'll leave that there. And see what we get here. 1:25 out. Javaz, Redneck, Troutman, Trading Chris, what's up, brother? Joe, good morning. Cal, now, how we doing? Vin, good to see ya. John, good morning. Michael, 4 take profit pros as of yesterday. You're getting there, man. That's a hell of an asset to have. 4 pros. That's pretty good. Daily payouts on 4 accounts at take profit. Man, I think most people, the average cost of living in the States, I think most people could probably, if you have a reasonable edge, and you're not, living in Miami, you could probably be full-time with 2 or 3. Now, if you have a family, maybe you need 3, 4, 5. But if you're living really light, maybe you could go full-time with 1. But those take profit pros, man, it's a big deal. Obviously, it's better to have a few more than it is to just try to rely on 1, because if you blow the thing, you don't want to have, that lapse in potential income, which is why, listen, hey, if you are trying to bootstrap going full-time using the take profit pros, that's, I know I'd say this all the time, I think that's probably the way to go if that's your goal, because you get the daily payouts. Try to have a few, and if you're going to copy trade them all at once, fine. If it were me trying to bootstrap full-time with take profit pros only, looking to scale with Apex after the fact, which is necessary, but can maybe wait if you're just trying to get to full-time first, or at least hefty side hustle first. I would probably, let's say you had 4 take profit pros, maybe copy trade 2 and 2. I'm not a big fan of individually trading like 15 accounts. Obviously with take profit, you can only go to 5, but I know a lot of people like to trade each account individually. For me, there's not enough trades for that to really be effective throughout the day, even just scalping. 60 seconds out, by the way, from the close of this 2-minute bar. Let's see what we get as far as a close. Nice strong bear close, and I would like to get long. But I think evening out that equity curve, if your goal is to pay your bills from trading, is very important, okay? So you don't want to have, a 2-3 week period or something where you blow your pro accounts because you were copy trading them all together and some crazy black swan event happened, or you just went on a losing streak, and now you're, out of income for 3 weeks trying to get back into pros. That's not great. All right, 23 seconds out. Again, strong bear close here, and I would want to get long on that bear rollover. Yeah, not there. Next bar. Let's see what we get here. Extend these out. Again, don't overthink the levels, man. Just draw them. Draw the average of what you think people are seeing. What algos are seeing. Vanny, good morning. How we doing? Vin says, Nico, what do you think about Bookmap? Don't use it. Don't use it. Couldn't tell you. Could be a good tool for you. Could be a waste of your time. That's just the truth. If it helps you make money, great. But don't kid yourself, right? At the end of the day, your job is to read candles. Over the next few decades, because this has been the way it's been the past few decades, there's always going to be things popping up that are like, this helps you read. This is the thing that helps you read the market. I don't know. I mean, not to say that every tool is a waste of time. Obviously, there's some fantastic tools out there. They came out with the Bloomberg terminal. Smart money decided, hey, we should probably have this because it's an edge for the way we trade. We should probably know how oil is moving around the world in real time, right? Those things are helpful, but at the end of the day, if you're going to be trading futures, just my opinion, price action is king. There's no shortcut to price action. Why spend your time learning how to use, a tool when you could just spend that time learning how to read price action, which you might have to end up doing anyway if the tool doesn't work out for you. But again, I have no experience with Bookmap in particular, so I'm not going to talk particularly about that. I'm painting with a very broad brush here. All right, weak little bear close here, so on to the next bar, I suppose. Obviously, we could look at this. Right, we could see, hey, is that wedge collapsing? Is that turning into something? But we saw that same kind of thing start happening yesterday, and it turned out that the market really was just a little slow to act and backfilling the entire range until it eventually broke. And traders who fell for these little wedges, we saw that 3-4 times in a channel just yesterday, ended up not doing so well yesterday. So going to try our best to avoid falling for little wedges like that until they really prove themselves, at which point they'll probably already be broken. All right, 36 seconds out here till we get a close. I gotta tell you here, depending on how this bull bar closes, I'm not against a little idea here. Let's see how it closes. I would need to see it close clean above that wick of the previous bar. Nope, not at all. Not there. All right, on to the next. Brandon, good morning. How we doing? All right, now, minute 20 out, generally speaking, right? Let's say this bull bar closed here, 97.50. Let's say that happens. I think I want to bet against this becoming a wedge. which means if we got a nice closed bull bar, I would get long for a push back up toward the middle or higher third of this channel. Because these wedges, they just haven't been forming very well. They've been looking like they're going to form and then snapping up. For me, maybe worth a scalp here if we get a reasonable close. But, you know, I'm not going to sit here and pretend like that's the highest probability trade I'd ever take. It's certainly not. But is it worth a trade for me? Yeah, it's worth a trade. There's probably a little bit of edge there for me, the way that I manage things. But only if we get that close, and it's not looking like we're going to get it yet, huh? All right, let's see here. Boom, I'll punch it long, limit order out, no fill. Give it 10 more seconds here. There we go. Got a fill. I will suck up my protective stop. Boom, right there. And we'll see what we can get here. Position window, top left. Nico, have you tried trading ES? Yes, of course. What's your opinion on it compared to NQ? My opinion is they're very similar. Hang on here. $10. All right. $1,000. 1094. Let's move on. Nice little scalp. Break the ice here. ES compared to NQ. NQ is a little bit more efficient when it comes to commissions, just because all else held equal, the moves are a little bigger on the same move, if that makes sense. You get a little bit more out of the move, because obviously NQ and ES tend to track each other more or less. NQ is a little bit more efficient. But a lot of people find ES to be smoother, NQ to be a little bit bumpier of a ride, which I get. That makes sense. In low volatility environments, I find ES to be a little inefficient because one tick makes up too big of a percentage of each individual potential trade. That makes sense. So when you take a tick of slippage, for example, or let's say you enter with a stop limit buy order, you need it to go an extra tick further for the same move. And when the tick is a bigger percentage of that move on ES as compared to NQ, it tends to be a little bit more frustrating and a little bit less efficient. But in high volatility environments, I would argue that maybe ES is the way to go. But listen, all this being said, guys, pick a product and trade it. Whether you trade NQ or ES, I promise, is not going to be the difference maker in whether or not you make money. The difference maker is going to be, are you applying your setups to the context of the current market environment? That is the difference maker. And then, of course, emotional control, which a lot of people need help with. But it's not going to be, oh, I'm losing on NQ. I don't have good emotional control. I'm not looking at market context. Maybe if I switch to ES, I'll make money. I'm trying to save you time. I promise you won't. You need to, like, basics. Price action, market context, discipline, plus emotional control. There you go. There's the equation. All of that over enough of a sample size can equal edge if you're improving, you know, week to week. Even day to day. It doesn't have to take, you know, years. For most people it does, but it doesn't need to. Bumble, good to have you back. Doing well. Now, by the way, some people are going to say, I switched from ES to NQ. and now I make a bunch of money. Or I switched from NQ to ES, and now I make a ton of money. You ever stop to consider that maybe the market environment just shifted around that time? And the way that you were trading wasn't working well, because let's say you were trying to trade ranges on NQ, and the market context was it was a trend market, and then you switched to ES, and the market shifted from a trend market kind of into a range market, and you traded the same way, and now you're making money, and you think it's the product change, but it's really just the market environment shifting, right? That's almost certainly the case. If you suck at trading NQ, you're not going to be the best trader on the planet on ES. They're so similar. All right, we have a minute and 5 seconds left here on this 2-minute bar. Worth mentioning here, by the way, the 20 EMA on the 5 is right about 194. And that bar is increasing. So, listen, had we seen a close, maybe 203, I'd have sold this rollover here in 10 seconds. But as we push lower, again, I'm not looking at these lines as gospel at all. These are guidelines. It's always a range. Everyone's going to draw it a little bit different. Just try to draw the average. All right, 55 seconds out here. Again, strong bear close. I'm going to have to buy the rollover. We'll see if we get that. Ten seconds out. Looks like it's going to be an inside close here on this bar. We'll go on to the next. Again, beauty of the 2-minute. Beauty of the 2-minute. The 1 minute's a little quick to make good decisions, in my opinion. At least on futures, right? On like small cap momentum, I do trade the 1 minute. But even scalping on futures is meant to be like a little calmer. Obviously, two different worlds. The 2-minute, I think, is a good balance. Obviously, 5-minute quality gets jacked up in a good way, but quantity falls pretty tremendously. All right, Vin, I'll tell you what, I'll keep an eye out for your application. Obviously, for the full-blown market mastery, you have to apply, and then I have to accept you on. Of course, there also just is one-on-one coaching, which you do not have to apply for. You can just sign up for. All right, 33 seconds out. All right, inside close, on to the next. Uncle says, hey Nico, is there a video you recommend on your channel to learn more about how you trade? You know, that would be about a 6-hour video. Not that it's so complicated, because it's not. Price action is very simple on purpose, because simple has the most eyeballs. Simple creates the biggest self-fulfilling prophecy. Fancy, no one cares about. You can get as fancy as you'd like in trading, and nobody gives a shit. It doesn't matter. Because if no one's looking at what you're looking at, oh, look, I have these cloud indicators on my screen. It's like, yeah, you and 4 other people, who cares? It doesn't help you. But, that being said, there's a lot of context to cover, right? So certain situations, there's different looks, and there's things you pick up on over time. So maybe a short video, relatively short, I'm sure would be helpful, but I get it, it's a bigger time investment, but the best thing you could possibly do if you care to learn how I trade, learn from whoever you want, but if you're like, yeah, I like how Nico trades, the best way to do it is watch the stream and just watch in real time. You're gonna learn the best, at least that's how I would learn the best. Ah, yes, Chris, and if you're trying to figure out the mathematics behind trading as a business, the how to make your first 10,000 trading is that's what that video is. All right, 5 seconds here. Looks like another inside close, man. Let's see. All right, on to the next bar. Nothing we can do there. This is actually a very important question. Why 2-minute bars if most people watch 1 in 5? I use the 2-minute because I think that time frames are irrelevant other than if they're extremely heavily watched, like the 5-minute is really heavily watched, so maybe it creates somewhat of a self-fulfilling prophecy, but not nearly as much as the price action itself. Just price, right, which is represented on all time frames. So I watch the two for a balance of quantity and quality as far as setups that I get for the way that I trade in my own trading. And if you're going to trade futures for 3, 4, 5, 6 hours a day or longer, you have to be able to make good decisions throughout the whole session. Trading a 15-second chart, you'll make good decisions for maybe 15 minutes, and then it's going to start to go downhill. Even if you don't realize it, you're going to start missing things that you would see if you had more time. Because you have to remember, when we're trading price action, we're looking at all of the looks. Okay, what's the bear case? There's two of them. What's the bull case? There's really only one bull case, but it's strong. Okay, now what's the price action telling me? What's the range? Is it falling? Is the range increasing? Is there any news coming up? 15-second chart, man. Even a 1-minute chart is really hard all day. A 2-minute, I think, is a great mix of quality of setups and quantity of setups, because remember, as scalpers, we're also interested in sample size of trades. We take a little bit of edge and scale it to as many trades as humanly possible, while not giving away the edge is the key there. Right? Don't just take trades for the sake of taking them. The 5-minute chart is great. Pretty good quality setups. Of course, they're not all winners, of course, but good quality setups, but they come less frequently, and that hurts the sample size, which is important to us for profitability. There's nothing magic at all about the 2-minute, at all. I just like the balance for myself. You could trade a 3-minute. If you're like, the 2's a little quick, honestly. What about like a 3? Trade the 3-minute. Almost no one watches the 3-minute. Very few people watch a 2-minute. But that's not why I'm watching it. It's more like a customization of, hey, how do I want my balance of quality and quantity to look? And then, of course, I keep the 5-minute pulled up to see, you know, hey, is there a really, really nice setup that aligns with my plan on the 5-minute? If so, I'll switch to the 5-minute, put it on. All right, inside close there, on to the next. ATR, by the way, is right below 11. That's the average range of a 2-minute bar right now. It's a little low, but it could be worse. Nico, what do you mean by an inside close? An inside close is a close of a bar inside of a wick that I'm paying attention to. So, for example, this bar here, see how it closed right at the wick high of the previous bar, and then inside of this really obvious wick? Inside close, there's really nothing I can do there. Is there edge there? Yeah, maybe for an algorithm who has 8 million trades to go off of. You know, as human traders, we don't have that luxury of taking trades with a 0.25% edge. We don't have that luxury. We have to wait until maybe it's a little bit higher than that, right? So I let the algos and the degenerates trade kind of the middle of the range. But for me, when I look at that, like the bar that I'm currently hovering over, there's just nothing there for me. For me, right? Now, maybe you're looking at a 3-minute chart, and at 23,209.75, there's a trade there for you. Fine. But for me, nah, there's nothing there. However, if we get a nice, strong bear close, there's something to think about here. But now we have to think about something else, right? Ignore this and this for a second. If we zoom in, what is this kind of starting to look like? Right? Right? A 12-point wide channel. However, still, if we see a nice low bear close, that kind of supports both if it's a sideways trading range or if we're maintaining the bull channel. This. So that would be a trade I could still take. All right, 33 seconds out. Let's see what we get as far as a close is concerned. Big wick back higher. We're gonna close as a doji after all that? Yeah, not quite, but nothing there for me. Had we closed down here in this region, I'd have bought that rollover, look for a pushback up into the sideways trading range. In a market like this, I just have to assume most breakouts are not going to go very far. It's never going to be to the point. But if most breakouts aren't going to go very far, we're trading the range. Now, at some point, a breakout is going to go very far, which is the other part of the equation. You have to make sure you're managing risk and not just trading naked. And, you know, if it goes far, you're blowing up everything. No, you want to have a point where you cut it. But that's range trading, right? When it's a range, I like to lean more into negative reward to risk. To me, that makes mathematical sense. If you can't make sense of that, then trade your own way. Totally cool. There's a million ways to do this. All right, we got 20 seconds. Let's see here. Nothing on that bar. On to the next. 2 minutes out. Now this to me starts looking more and more like a very clear, you just got a rough draw it. I mean, there's no good way to draw this, right? I mean, it's kind of wicky compared to the volatility we're seeing. But it's almost undeniable that it's a sideways little trading range here. Now, I'd be less inclined to short the top of this because there's so much room up top if the bull channel decides to resume. But I am interested in getting long down here. Because if I end up getting stopped out, then both these ideas are broken, and then we got to look at it with fresh eyes anyway. So I'm just going to get rid of all of this. I like to clean things up as we go and see if we can get a close maybe down in this region here. 46 seconds out. Nico, are you all about reversal of whatever you consider the trend to be? No. Or are you always looking for trades in direction of a larger time frame? I'm looking for what makes sense based on the context of what we're currently seeing. If we're seeing a rather aggressive bull intraday trend, but I know we're in a range market, I will trade in the direction of the trend, but I'm less inclined to just buy high and look to sell higher, which is exactly what I would do in a trend market. Everyone's always scared to buy high, but in a trend market, that's what makes the most sense. It'll be 100 points in the green. All of a sudden you look back and you're like, it's too high. You look back 90 minutes later and we're 400 points in the green. It's like, shit, should have bought the high. That's because it's a trend market. This is not a trend market. This is a range market. So if I'm going to buy in the direction of the trend, I want to buy pullbacks. But you have to be very, very aware that a lot of what you think are trends intraday on a range day, which it's been all range days essentially lately, a lot of those are going to turn into sideways trading ranges. So if you're buying high, it's not unlikely that you get caught. You know, let's say you buy up here, up here, up here, and now you're stuck in the middle or the high end of what is now a sideways trading range and hoping it breaks out, which I'm not really into being in that position, at least as far as we can help it. Sometimes we end up in that position. Can't be right every time. Yes, John, good observation. He says, feels like we are at the 50% retracement from the start of day. Here's the 5-minute chart. We're pretty much there, kind of right in the middle there, right? Now, why does that mean anything at all? Well, I mean, right, think about it. We talk about this pretty much every day at this point. You get a big dump off like this, what's happening? Sellers are in control. This is just logic, right? There's no magic. Sellers are in control. What are bulls doing? They're saying, it's a range market. Average in, average in, average in. Oh shit, I'm really red. And then it comes back. Are the bulls really looking for a push up to 23.4? No, they're break even. They're thanking their lucky stars. They're like, I was just down 13,000. Now I'm break even. I'm going to hit out. That creates a little selling pressure, which oftentimes creates a little sideways trading range, right? And then once all those clear out, then it's 50-50 which direction it goes from there. We just got to trade the reaction. All right, minute 27 from the close of this 2-minute bar. Let's see what we get here. Again, I'm not really watching that 20 EMA, which is that blue line. I'm much more so watching this region here. So if we could get it closed down here, I'd want to look to buy that personally for a push back up into the trading range. And if that snaps up and breaks these lows, I'd cut it and move on. Look for, you know, hey, are we getting a curl downside now? $50 seconds out. All right, there's the rollover inside bar. Nothing on that bar here. Out of the next minute 56 out. All right, 20 seconds here. Not in love with the price action here on the last couple of bars. Yeah, sizable wick back there on that bar. All right, on to the next here. Minute 55 out. So, you know, right now, if we got a nice big bull bar closing above 220, it brings up the question, well, you know, maybe you buy above that bar with a stop. In this market, I'm not interested in doing that. I don't want to pay that much because I think it's more of a range market than a trend market. Even if we're in what you could call maybe a soft bull intraday trend, I don't want to pay that much. So I want to get long, but I would like to do so on a strong bear bar where the bulls really think they're going to do something, and then I'll just bet against them because I don't think they're going to. Or the bears think they're going to do something. Did I say bulls? You know what I meant. "20 seconds out here. Is that exact scenario going to happen here? Let's find out. Bit of a wick back anyway there. See, that bear's trying to step in. Again, you cannot, well, I cannot trade this move as if it's an aggressive bull trend because it's just not. It's just not, at least not yet. If it turns into one, sure, I'd be open to using stop limit buys. But in the current environment here, I'd much prefer to bet against a bear. A bear bar here. That's a hell of a push out of the bulls. Let's see if they hold it. All right, sizable bull bar. Now, if we're going to get long here, again, I don't want to use a stop limit. I'd be using a regular limit, but I got to see how it closes. Don't want wick. At least not much. 40 seconds out. I'll get ready just in case. I'm not taking too much bullshit here from the bulls. It's got to be clean, man. Yeah, that's not clean. At least not clean enough. All right, on to the next bar here. Minute 50 out. We're getting good information either way on these bars. Nice push. Jesus, is that a headline? Not seeing anything coming through on my end quite yet. Damn, what a push. This is the 5 minute? That just push up through, well, I mean, technically here. High of day after the bell. Hell of a push. Hell of a push. We got 57 seconds until this 2 minute bar closes. This is a 5 minute chart that you're looking at right now. We just got the rollover there. Back to a 2 minute chart here. Gotta be a headline. Nothing coming through the wire yet. I'm hands off till I get a reasonable setup, man. What's FOMO? I do not care. I could not care less that move just happened. If it gives us a setup, I'll take it. We got a minute 15 out until the close of this 2 minute bar. One thing I do care about here, though, is volatility. That's very good for volatility. This kind of thing starts to get a little frustrating. That bar, that bar, that bar. Volatility is just tanking well below 10 points per 2 minute bar. So this is very nice to see. 38 seconds till the rollover of this 2 minute bar. Now you gotta be careful because that was obviously most likely a headline here. Most likely a US-EU tariff headline, if I had to guess. And you can get follow-up headlines, right? It's very common to get follow-up headlines. The probability of getting a headline at any given bar is, whatever it is, relatively low. But once you get one, the probability of getting a follow-up is extremely high. And that also contributes to volatility, which essentially is 50-50. Okay, so if I'm going to take a setup, for example, if I were going to enter long on this bar, I would need to see it close pretty much right at the top, right at 293 for me to justify putting that risk on. Obviously, we didn't. We wicked way back, closed in basically a doji, and now we got to pay attention to this bar. See how this closes? A minute 42 out. US and EU close in on 15% tariff deal. Financial Times. So, of course, what likely happened there is that news maybe hits the wires at institutions, hits the terminal, and then hits all of us. Now again, if you wanted to invest in a Bloomberg terminal, I looked into it very seriously a few years back. It's unless you're actually running like high frequency algos, which no one in retail probably should be because information can only travel at the speed of light and you're not nearly as close to the exchange as the institutions are. So you shouldn't try to compete. It just doesn't make any sense. So let's assume you're not doing that. A Bloomberg terminal is, last I was on the phone with them, I think it was 24. It was like $2,400 a month, maybe $2,700 a month. And I was like, okay, well, and I thought about it more and more, and I really looked into news and how news travels throughout the industry. And we all know that news in the financial markets is essentially a monopoly. Let's not pretend. Everyone acts like, oh no, it's on this broker, this glitch is on this broker and this news outlet and that news outlet. It's like, yeah, because they're all getting the error from the same source. Of course it's on all of them. It's all being pushed from the same couple of companies. So when one of the top level companies has an error, it goes to damn near everybody. Creates conspiracy theories, all this bullshit. But trading news is essentially 50-50 even if you have a Bloomberg terminal. So I really don't think it's worth it for the average retail trader, even if you're making millions of dollars a month. Unless you just want to flex on your friends, in which case have at it. All right, 57 seconds out. Let's see how we close here on this bar. Nope, big old wick back, not there, no trade. Next bar. That was a stop limit sell I had ready, by the way. If we saw a nice low close, well beneath this previous wick right here, had that bar closed down 40 or below, I'd have put that just below the bar, and if we dumped through, I'd have gotten filled short. No trade, though. $60 seconds out. Inside close. No trade. Next bar. All right, 10 seconds out. Let's see how this bar closes. Looks like it's going to be another inside bar here. Yeah, inside close. Tell you guys what, I'm going to go grab coffee. I'll be back in a couple minutes. Don't go anywhere. If something crazy happens, by the way, blow up the chat. Let me know. right, we are back, baby. All right, we got 90 seconds out till the close here of this 2-minute bar. We have the 5-minute 20 EMA at 23,220. That's 220. So the 20 EMA on the 5 is right about there. So, I'm paying attention to it. It's certainly not gospel, but I'm paying attention to it because I know that other people are going to be paying attention to it. About 60 seconds out here. Thirty seconds. Benny says, Wrench, why don't you plot a 50 EMA on the 2-minute? Because I don't want a 50 EMA. I mean, you could say that about anything. You could say that about a 20 EMA. You could say that about a 50, a 100 EMA, a 200 EMA. It's just, when does it end? I think a lot of people get emotionally attached to a certain indicator, whether it's volume weighted average price, EMA. I don't care about any of them. I could not care less about any indicator. VWAP is kind of helpful sometimes, depending what you're trading. It's especially helpful on small cap momentum. All right, let's watch how this bar closes here. Minute 43 out. Nah, Vinny, I got you. Because, yeah, I hear what you're saying. I know. It just won't make much of a difference to me. You guys know, when I'm looking at the 2-minute, I'm very rarely like, oh, there's the 20 EMA on the 2. At this point, I should probably just remove it. Because people are probably getting confused. But, I don't know. And if I do that, by the way, then I start getting unintentionally attached to a certain line, which I never want to do. They're just not relevant enough. Well, Travis, good to have you. Stick around. I think you'll pick up pretty quick. At least how I do things, which is not the only way to do things, but it's one of many. All right, few seconds out here from the rollover of this 2-minute bar. Now this starts to get a little bit interesting because we can make this argument, right? It's an argument you can make. You can make this argument, though it's extremely aggressive, and I'm not a big fan of aggressive channels like this. It's not extremely aggressive. It's relatively aggressive, I'll say. Minute 18 out here from the rollover. Toby, good to have you. Chris, what's up, brother? How we doing? All right, 30 seconds out-ish. Yeah, Joe, I'd agree with you. I'd agree with you. All right, inside close there on that bear bar. Speaking of which, had that closed near the low down here, you know, in that case, I'd have been very tempted to pull out this number, stop limit sell right below. Better get rid of that. But this argument's a little strong for my liking, right? To have done that. But we didn't get it anyway. Inside close, inside of the previous bars, wick low. This bar becomes very important to me. A minute and 20 seconds out until the close of this 2-minute bar. Let's see if we get a nice, clean, low bear close out of it. And if we do, I'll have to look to sell that rollover. Sam, we're trading price action applied to market context. And we are trading the micro NQ futures contract. Thank you, John. All right, 30 seconds out here. Let's see if we get a nice clean close. Has to be near the low of this bar, and I'll sell that baby short. The no backbone bears. Can't do anything on that bar. That's a big ugly wick. All right, on to the next. If we did see a nice strong bull close, by the way, within reason here on this bar, I would be interested in getting short on the rollover. Because that would also be a retest of the 20 EMA on the 5. It'd be a retest of this little bear channel that a lot of people are probably seeing here. And I'd want to get short to look to see if we can take out... Well, we wouldn't have to necessarily, but if we could take out new lows, maybe an extra 3 points would be on the table there for us, so... Interested, but I need to see this bull bar close up here. 22 seconds out. Big old doji. Nothing there. On to the next bar. Travis, is there an aha moment with trading, or do you just suffer less over time? Well, a lot of people suffer the same amount over time because they're looking at it like, well, if I just do it longer, I'll just get better. But really, they're just avoiding what they know needs to be done, which is to think about things logically, address the elephant in the room, which is the fact that so many people have massive emotional control problems and essentially turn into gamblers after 12 minutes at the screen. And then also tracking your data is crucial. Without data, how the hell do you expect to make any money? You're on the greatest playing field in the world. The financial markets in the US. And do you think you can just show up for 22 minutes a day, make a decision, and it's going to pay you for, 60 years? Come on now. Which, by the way, all of that is a tremendous focus in all of the one-on-one stuff I do. Whether it's the full-blown market mastery or the regular one-on-one coaching. Because that's what works, and that's what's important. Of course, people don't like to hear that because it means work. But, I mean, what are you going to do? You're going to get up every day and play in the Super Bowl with 2 days of spring training? The fuck? Of course not. What's wrong with you? All right, but we'll see if we can get a nice clean close above that previous wick high. If we can, I'll sell the rollover. If not, no trade. Not there. Next bar. Joe, man, I think you might be the only Bills fan living in Miami ever. I like the Bills. All right, 45 seconds out here. $22 seconds out. Yeah, Eddie, we took one trade for about $1,100 earlier. Kind of a slow day, honestly, so far. We're just getting started. Inside close. There's nothing we can do there. Next bar, minute 56 out. Shomisha Wrench, you should do a video that covers different examples of candles and what they mean in terms of price action context. Well, okay. I mean, I like the idea. The problem is, I think it would confuse everybody, because if you slap the exact same candle on 10 different random days selected from the past 2 decades, with, of course, randomized market contexts and also randomized intraday contexts. All of a sudden, there's a million different options for how to read that candle. Now, I think the way to think about this, I get it, it seems super intimidating when you start thinking about market context, but I promise you it's not. Think about what the candle means. What does this candle mean? Let's forget the fact that this was a news bar for a second. This one here. Just look at the action. What does that mean? The bulls took massive control. The bears came in and caused a little bit of insecurity. Bears betting against that move. They think, I don't think so. I don't think that's going very far. Range market. The bulls said, we got a little excited, but maybe you're right. Maybe you're right. Right? And then this bar, it turns into this. So what does that mean? You know, market context. If this was a big trend market, maybe this bar closes up here and all of a sudden it's a breakout bar that goes 300 points higher. But it's a big bull bar that shows a little bit of bull insecurity. Okay, what's the market context? Range market, right? And then you get this. Of course, this is in hindsight you get this. This is not going to happen every time, but now in hindsight we can look at this and say, okay, see what's happening here, right? Bear is a little insecure. Bear is like, you guys thought. And then we fade it back into the range. So I really think the best way to understand market context and the way that it matters is to just hang out and watch the stream, or watch anyone's stream who's talking price action. It doesn't matter. I've always learned from just throw me in the fire and I'll figure it out. Now, of course, there's a dumb way to jump in the fire, and maybe it's probably not a smart way to jump in the fire, but we can be a little smarter about it. Maybe we stick a pinky over the fire to start, right? You trade 1 micro to start before jumping right in. All right, Raja, I got your application, man, for the program. I'll hit you back later on today when I'm off stream. But get back to me first with that first text. All right, we got 60 seconds out here from the close of this 2-minute bar. If we get a nice close beneath this wick here, I'm interested in selling short, see if we can take out these new lows. "35 seconds out. James, how we doing? All right, inside close there, on to the next bar here. Same idea applies. 2 minutes out. Tom, good to have you, brother. Hope to see you become a regular here in the chat. We have many of them here every day. Yeah, I'm at ATR right now. What are we at? ATR is about 17. That's good to see this time of day. Could be 7. 17 is great. All right, another inside close there. We got to see someone get a little cocky, and we can bet against them. $60 out here. So again, I mean, right now we're clearly in, I would argue you could call this a wedge. Starting back about here, right? You could call this a wedge. Flat top, flat bottom. Or you could call it, again, a wedge. Flat top, little ascending support bottom. I don't care too much. Just give me one side or the other, trying to get a little bit cocky, and I'll try to fade that. Here again is the retest, the 5-minute 20 EMA. Happens to be lining up, by the way, with the 20 EMA here on the 2-minute chart, which is what we're currently watching. It's just a coincidence. Ah, come on. I'm at least over 5. Come on now. Getting outed by the wife. All right, minute 37 left here on this 2-minute candle. All right, 30 seconds out here from the rollover of this 2-minute. See if we get another inside close here. All right, minute 39 out. Okay, here we go. Here we go. 47 seconds out. Let's see here. Few arguments we can make. Few arguments we can make here. Right? Well, here. Kind of early to draw something like this, but maybe we end up seeing something like that. So I'm not gonna count on that. Let's get rid of all this. Ooh, come on, bulls. Next bar. These bulls, man. I want someone to get real cocky. Bulls or the Bears, and then bet against them. Yes, Joe, you're correct. We have 49 seconds until the rollover here of the 5-minute bar. Let's, for a minute here, switch to a 5-minute chart. And let's just see how this closes. I need to see it close above this wick high. We have 15 seconds. Not so sure about that. Yeah, no cigar. Back to the 2. Not a bad idea there, Joe. Just didn't work out, at least for me. God, look at our chat here. Inclusive. Many different cultures. Look at us. You guys might have to chill out, though. I don't speak Spanish. So I don't know what we're saying here, man. All right, 90 seconds out here. Let's see. A nice strong bear bar closing near its low here. I'd want to get long. 60 seconds out. Come on, Bears. Step in. How we did it yesterday, though, didn't we? 40 seconds. Come on, Bears. Give me something here. Give me something to do here. Let's get a nice low close, strong bear bar. Let's get these bears feeling good. And then I will say no, and we will buy the rollover. All right, we have a dual rollover coming here. Take a look up top. Dual rollover. Top left is the 5 minute, top right is the 2 minute. Those two rollovers will be lining up, which I wouldn't say is so important as an event. But for me, if you get a nice close out of one, you're probably getting a nice close out of the other, at least the way it's set up currently. And that can be a beauty of an entry, at least for me. So we're a minute 15 out from that occurring. Let's see if the bulls can take this higher and give us a nice clean close near the high, in which case I would get long. I gotta tell you, I would also be looking to get long if we saw a nice bear close near the low. Anything in between is not enough cockiness out of the bears for me to bet against, and not enough confidence out of the bulls for me to bet on. So let's see here, 50 seconds out. You can see that look back to the 2 minute. Let's see if we can execute something here. Thirty 32 seconds. Bruce! What's up, brother? How we doing? Ten seconds. You don't get much uglier than that. Oh, goodness. There's the 5 minute bar. Ugly. 2 minute bar. Ugly. That's all right. On to the next here. 2 minutes out. Actually, a minute 45 out now. Yeah, Joe, I'd like to wait for the rollover. I certainly don't always need to, but most of the trades I'm taking on rollovers, yeah. But, I mean, again, it's not like I'm delusional, right? I mean, realistically, the only important thing about a rollover is that it's the top of the minute. 2 minute chart, top of a minute. 5 minute chart, top of a minute. That's really it. It's just a checkpoint for me to make a decision, so I'm not sitting here all day looking to make a decision every second. It's a longevity decision. Really not a lot more, and it helps me interpret the data a little bit better because it's kind of a cutoff. Well, it is a cutoff. The rollover is not like some big meaningful thing. It's just a time chop. But it helps me visualize the data better, and it gives me a checkpoint. Okay, when do I need to make a decision? And I think for longevity, it's worked well. Certainly, you don't have to wait for the rollover. I just prefer to. And on a 2 minute chart, those checkpoints come often enough where I'm not worried about it, you know? So. Good cleanup day, John. Good cleanup day. Get out of here, enjoy it. Let those emotions tame themselves. All right, here's a new 2 minute bar. Big old inside close, small bear body. On the next one here, a minute 50 out. All right, 60 seconds. Yeah, there's no magic here, Jeremy. Trading is not that complicated. It just takes more work than I think people think. People think of trading as like, oh, I can show up for, 18 minutes a day and make $1 million a year. You can definitely make $1 million a year. You can definitely make $10 million a year. You can definitely make a lot more than that. But it's going to take more than 15 minutes a day. It takes more work than you think. It pays more than you think. And it's less complicated than you think. But it takes a lot more discipline than you think. There's a reason trading can pay so well. There's no free lunch, so to speak. You're not going to find a profession that pays stupidly well that is easy or does not take a large investment of attention. That defies logic, right? It wouldn't pay so well if it were easy, I'll say. All right, 48 seconds out. Let's see what we get here as far as a close. We need something other than a doji here. All right, yeah, ATR here. Yeah, it's sitting at about 12. I really don't want to complain about 12 this time of day on a 2-minute chart because that's not too bad. It could be 5. You know, the average range in points of a 2-minute bar. So, I mean, we're holding above 10, which is good. It's just this sideways doji after doji action is tough. There's just really no decision to make. But never lasts forever, so just gotta wait this out. There we go, there's a little push. $60 seconds. All right, 25 seconds here. I want to see a nice strong bull push and a close up in this region, and then I will fade that for a look back into the range. But the bulls got to give that to me first. Come on, bulls, try to break it out. Inside close, not there. Next bar. By the way, guys, quick heads up. If you're at the scaling portion of your business model and it's time to fucking take this big, Apex, this ends in about 1 day. 80% off, and you can pass an Apex eval in 1 day. So yeah, if you traded today, you could technically be funded tomorrow if you use code BIG over at Apex. That promotion ends in about a day. Okay, it's been around for a little while now, and they're gonna pull that in a little over a day from now. Well, tomorrow. All right, 25 seconds out here. What's the width of this little range? Yeah, about 14 points-ish. 13 points. Little tight. ATR still holding up a little bit. We're still at about 11.5-ish. Nothing there. Inside close. Just very, very indecisive right now, the market is. Let the algos trade this little sideways doji movement. They have 8 million trades to understand their edge in exactly this scenario. We don't have that luxury. We need a little bit more edge than, 0.25%. They'll take that trade all day long. For us, it's too hard to understand if there's edge or not on a close like that for us. We don't have the sample size, right? So we gotta wait. Gotta wait. Again, kind of a slow day today. I mean, what? Yesterday at this time, we had taken at least, I think, 5 trades or 6 trades, something like that. But I mean, this is what I always say, right? Let it come to you. When it does, hit it. No fear. Six seconds. Come on, Bears. Next bar. Alright, looks like volatility might be increasing a tad here. Let's see. By the way, a bunch of new people here last couple of days. If you are new, live every day, man. Subscribe to the channel. We'd love to have you as a regular here. Yes, also, we're recruiting more Chris's. We have about 5 or 6 Chris's who are regulars in the chat daily. So if your name is Chris, man, let's add to that number. Yeah, Chad, man, you gotta like the stream or subscribe or something, brother. Just typing. YouTube works differently than it used to. It shows you what you engage with. All right, let's see here. Give this about 10 more seconds here. Let's see if we can get a bit of a retest. Inside close, but I like what I'm seeing. There's the cutoff point. Gotta hold off. 15 seconds. I give higher quality, like A setups, 30 seconds to give me an entry. Anything like B plus or below, I only give it 15. And I'll hit it if it gives it to me within 15. If not, hard cutoff from me. So next bar here, we're 1 minute and 26 seconds out. Let's see what we get as far as a close. Jed, good to have you. Dan, good to have you. All right, 33 seconds out. Let's see what we get. Bulls are trying to break this out into a little bull, more aggressive, soft bull channel. If they can get a little cockier than this, come on, man, this is nothing. If they can get a little cockier, I'd like to fade them, but that's a shrinking bull body. Which would be a rule break, of course. All right, minute 50 out. Let's see what we get. Ideally here, I would like to get long on a nice, strong bear bar. The close of a nice, strong bear bar, that's my ideal situation here, near the low of this channel. And I would buy that. Eight seconds here. Inside bar, big wick. All right, guys. Well, one scalp, one winner so far here today. Hell of a lot of wicks, hell of a lot of inside bars. I'm not one to sit and say, oh, it's a choppy day. It's choppy today. Most of the time, it's not choppy. You just lost. I just lost, for example. But one trade, one scalp so far today. That's pretty light. It's a light day so far. We're up 1,100 bucks. It's light. But I'll tell you what, I mean, it's time for me. I got to go hit lunch, and then I'll come back and scalp the afternoon. We'll see how it goes. But listen, hey, guys, hope you have a great rest of your day. We got a few hours left here. I will certainly be back at the screen this afternoon to see what we can pull. But right now, man, this lunch hour needs to clear out and let this thing break and pick a direction and maybe see some more volatility. Even if it's just a wider range channel, we can work with that. But right now, things are a little bit tight. So anyway, guys, hey, make sure you use code BIG, B-I-G. That will give you the best deal always, 24/7, whether you use it at Take Profit Trader. If you're trying to bootstrap going full time, daily payouts, fantastic way to do it. Or if you're trying to scale to go fucking big at Apex. All right, guys. All right, have a great rest of your day. Be patient. That's part of discipline. But the other part of discipline that no one talks about is when the trade comes. No fear. Hit it hard. When it's time, it's time. When it's not time, you gotta do this. All right, guys. I'll see you tomorrow morning. Subscribe if you haven't. Have a great day. See you tomorrow.